Good morning, good afternoon, and good evening to everyone. Let's maybe start our session. My name is Ahmed Fragalla. I work as a senior financial sector specialist in the World Bank. And our session today is about the intermediaries and how we regulate the intermediaries. This is part of the electronic payment acceptance work group, and this work is under the initiative of FIGI, Financial Inclusion Global Initiative. So maybe at the beginning, I can give you a little bit background about the EPA work. We are having 4 work streams within the work group. One of them is about the incentives, the other about innovations, the third about pricing, and the fourth about the intermediaries. Actually, the output of all of those work streams would be a number of reports addressing different aspects of the electronic payment acceptance. And the output would be a report about incentives, another report about innovations, a third report about the intermediaries. Here we are focusing on the third report about the intermediaries. And by the way, we are developing as well what we call an electronic payment acceptance toolkit, which is a toolkit for authorities that would enable them to assess the electronic payment acceptance market in the country, and based on this, start to take some sort of action that would change the overall business in the country to enhance the electronic payment acceptance. I have with me a number actually of very distinguished panelists. I would ask you, please open your cameras and start introducing yourselves. Let's start by Mr. Suhail Jawad. Mr. Suhail is the Director of Payment Systems Department in the State Bank of Pakistan. So please, Mr. Suhail.
Thank you, Ahmed. Thank you for having me here today. My name is Suhail Jawad, and I'm the Director of Payment Systems at the State Bank of Pakistan, which is the central bank. I've been with the bank for the last almost 24 years. I guess now 24 years. And I've worked in different departments of the bank, including treasury, supervision, IT, and now it's payment systems. I have led a couple of high value projects in the bank. I was the project manager for the real-time gross settlement system as well. And now I'm the project director of the Faster Payment Systems of Pakistan, which is called RAS. I've also been involved in writing a number of regulations to facilitate electronic intermediaries in Pakistan, including regulations for payment system operators, payment service providers, and electronic money institutions. I think that's all from my side, Emma. Thank you.
Thank you, Suhail. I just need to say that Mr. Suhail is one of the people who really innovate in the electronic payments, and we will actually see how Pakistan is developing a lot in this field, especially in the last few years. Mr. Suhail holds a master's in applied science degree from the University of Waterloo in Canada, another master's of science from University of Karachi, and a third MBA actually from the Institute of Business Administration in Karachi. So thank you, Suhail, so much for joining us. Let's maybe move to Amina. Amina Tirana is Director in Policy and Measurement, Social Impact in Visa, and she is a fellow as well in Visa Economic Empowerment Institute. So please, Amina.
Thank you. I'm not sure I need to say much more in advance of that, except to thank the World Bank and the other organizers of this symposium for the several years of collaborative work on a number of important interlocking themes. I've been at Visa now for 6 years. Prior to that, I set up and led Queen Maxima's UN Office on Financial Inclusion, among other roles in long-term economic growth, and started out actually in emergency crisis response and assisting refugees. And over that time, the progress that we have collectively made is really great, but there's so much more to be done. Thank you.
Thank you, Amina. Amina has a master's of public policy from Harvard University Kennedy School of Government, and a BA from Princeton University. And she has actually, I have to say, a large experience in the field of financial inclusion, including her work with the UNSGSA, the United Nations Special Advocate for Inclusive Finance and for Development. Let's move to Ashley. Ashley, you're welcome. Ashley is Head of Financial Inclusion and Agri-Tech in GSMA. So please, Ashley, introduce yourself.
Thanks, Ahmed. Sure. So maybe before I talk too much about myself, for those of you that are unfamiliar with GSMA, the GSMA represents the interests of mobile operators worldwide, uniting more than 750 operators with almost 400 companies in the broader mobile ecosystem. The Mobile for Development team at the GSMA drives innovation in digital technology to reduce inequalities in our world. I've been with GSMA a few months now, so I'm pretty new, but until recently have been living and working in East Africa and Kenya for over the last decade, and working on financial inclusion as well as SME finance, working in impact investors to design and deploy funds towards agribusinesses and looking at fintech solutions. So really excited to be here. Thanks.
Yes, thank you, Ashley. Let me start sharing the presentation, and thank you all for contributing to this session today. The session again is, let me start by explaining the agenda. We will talk about the electronic payment acceptance intermediaries, who are those intermediaries that we are talking about. Then we will cover the opportunity that intermediaries can produce, the intermediaries in the mobile payment, the risks of the EPAI, the electronic payment acceptance intermediaries, and finally the regulatory approach. Let me maybe first give an idea about what we are talking about. So by the intermediaries here, we refer to maybe multiple types of entities that stays in the middle between the merchants who are providing the service and either the acquirer or other entities that are in charge of providing the acceptance service. Financial service providers that are in charge of the acquiring business. So here we are talking about maybe 4 types of different intermediaries. The first one is the merchant facilitators or aggregators. Those are typically the ones who hire the merchants. They sign the contract with the merchants. They avail the setup or the acceptance facilities, and then accept the money of the price of goods and services to their own account and then distribute it back to the merchants. So this is, by the way, the word facilitators or aggregators are used interchangeably in most of the countries. Sometimes there is a difference between them, but this is, by the way, addressed very well in our report about intermediary that we will publish very soon. The second type is the third-party processors. Those are exactly like the facilitators or aggregators, with the only exception is that they don't take the money of the merchants at their books and then distribute it back. So they hire the merchants, they contract the merchants, and they put the facilities and the IT setup, but at the end, the money goes directly either to the merchant or to the acquirer of the merchant and then to the merchant. The third type is the bill payment aggregators. Those are the ones who have or intermediate between the aggregators from one side and the financial service providers from the other side, in order to acquire the money of the aggregators and then make the distribution back. This is similar to the intermediaries who collect the money for utilities, for mobile money, and others. And the fourth type is the payment gateways that make the connection between virtual or online merchants and the rest of the world, including the acquirers. So those are on high level the types of intermediaries that we are talking about, and we will cover within this session the opportunities that they can make, the risks, and finally the regulatory aspects related to those intermediaries. Maybe I will move first to Amina and check with her that it's estimated that we are having something like over 180 million micro and small merchants in the developing countries, and those 180 million are mostly not linked to any financial provider or financial service. Actually, the expectations as well say that those huge number of merchants, they have some sort of 4.5 billion customers every day who are transact with them on daily basis. This actually gives us the a very good understanding about the impact of digitizing those services and digitizing those merchants in order to join the financial sector. So please, Amina, just explain to us maybe the opportunities that those bringing those large number of merchants to the financial sector. What are the opportunities and how we can do this? Thank you.
Sure, and thank you, Ahmed. It's very hard to know exactly how many micro and small merchants there are around the world. But as Ahmed said, the estimate of 180 million in the developing and emerging world alone gives you a sense of the scale and the size and the importance. And these are both formal and informal. And what we all know is that people start and run businesses for many different reasons. For many micro and small businesses, it's a livelihood strategy. Either it's a primary source of livelihood or sole source of income for their family. And very often it's also a secondary source or a source of resilience and safety. And then, of course, there are people who start businesses because they have an idea or see an opportunity, and these can really grow. But all told, it's a very important part of the fabric of an economy, of a community, of jobs and livelihoods. Ahmed, would you like me to start in on the presentation?
Yes,
or do you
yes, sure.
Right. So it was for this reason, actually, that we were thinking a lot at Visa about financial inclusion overall. And at Visa, we have had a long time focus on bringing more people and businesses into the formal financial system. As many of you may know, our logo is everyone everywhere, and that has to mean everyone everywhere. We want to give them that opportunity. And we've seen the evolution quite powerfully for consumers and individuals, but also for small businesses. And we started asking the question, well, what difference does accepting a digital payment really make for the lives and livelihoods of small business owners? And we were particularly interested in Mexico, where Visa had been working very closely with our clients and partners to innovate new ways to leverage digital technology to reach people and businesses. And we had seen over the last several years that there had been a tremendous growth in this area. So we commissioned an independent study conducted by a global research firm called 60 Decibels to ask exactly this question of small businesses that had started to accept digital payments in the prior 18 months. And this was conducted last October and November. So after COVID had hit, but we're still, very much in the middle of the pandemic. And it was for Visa PayFac partners, so payment facilitators, one of the 4 kinds of intermediaries that Ahmed mentioned, were very interested to partner. And they invited thousands of their micro and small businesses to participate in this survey. And there were some other conditions. So I just want to highlight a few things. This survey is of small businesses that had started to accept digital payments in the prior 18 months. It's not representative of all the businesses in Mexico. And it was agnostic. It was not about a specific intermediary. It was not about Visa. It was about digital payments. Next slide, please. Just to give everyone a shared understanding of the evolution in Mexico, there's been a tremendous evolution over the last decade that has really enabled more people and businesses to participate in the formal financial system. And I want to highlight just especially two factors that have really worked together to drive progress. First, it's the policy action that has been such a major enabler. And these policy reforms are both in the area of telecommunications, which has increased mobile access to mobile phones, reduced costs there, but also a whole series of policy actions and regulations around financial services that have simplified account opening, introduced agent banking, many other factors that have made financial products available to people in Mexico and increased that use. The second big factor in evolution is the entrance of payment facilitators since 2014, and they've become an increasingly significant component of the ecosystem. And as you'll see, they're filling a gap by providing customized solutions that are effectively reaching micro and small business needs. And I won't go into depth in that now, but I'm happy to come back to it because it's a really important part of the solution. So next slide, please. So as I said, this survey, 4 of Visa's payment facilitator partners, and we have many others in Mexico, sent out an invitation to their small businesses who met the criteria to participate in the survey. And more than 750 micro and small business owners responded. And as you'll see, the profile of, and this is all of the survey respondents, is very much, first of all, it's a very small business. The average revenue is about $1,200 US per month. If they have employees, the average number of employees in addition to the owner is 2.3. Many of them have been around, about half for more than 5 years, but only 30% have an online presence. But the importance of these businesses to the household is really, really big. On average, 57% of household income came from the business. So it really matters how they're doing. Most of these businesses were located in the city and about a third were women. Next slide, please. So there were 4 key takeaways that I'd like to highlight and then some actionable insights. The first is that about 3/4 of all the respondents reported increased in monthly revenue, increased in customer spending. Many reported, about the same amount reported increased customers, and they also reported improved business management due to digital payments. And what was really interesting to us, and I think really important if there's one takeaway, is that among those businesses that reported growth, they reported that their average monthly revenue increased by 22% since they started taking digital payments. And that's a huge bump up when you think about the contribution to livelihoods and just growing a business. Next slide, please. So the second point is something I highlighted at the start, is the reach of these payment facilitators as one of the types of intermediaries to reach people and businesses who were not accepting digital payments before. So among all the respondents, 75% said this was their first time accepting digital payments. So the other 25 may have been using digital payments before, but from another provider. As importantly, this growth is being driven by really small businesses and to some extent women as well, which we really care about. So 85% of respondents earn about $500 or less per month, and 80% of the women and about a third of all respondents were women, I should say. So 80% of women said this was their first time accepting digital payments. The third big takeaway is the people who are using digital payments are incredibly happy with them. The Net Promoter Score is a fairly common score used by all kinds of public and private sector measurement. And 60 Decibels came back to us and said, wow, we have not seen a Net Promoter Score like this at all. 71% of the businesses said they are willing to recommend this to other friends and businesses. And to put this in context, I think it was 60 Decibels explained that Amazon and Facebook at their height had net promoter scores in the region in the 60s. So this is something that's really strong, and it's about business growth, it's about ease of the use of the digital platforms, and it was about safety and security. Next slide, please. So the last big takeaway for us was that COVID has been tremendously hard on everyone, as we all know. 82% of the businesses said that they experienced a negative impact due to the pandemic. And yet in that context, more than a third have found part of their resilience and recovery is in digital payments. 37% have increased delivery or online sales, and 36% are accepting digital payments more than before. So next slide, please. Before I go to the actionable insights, I just would like to share a short story of what this means. In addition to the survey, we then conducted 60 Decibels, excuse me, conducted in-depth interviews with a number of the respondents. And one of those was a woman named Ana Rosa. And her family, her parents had a grocery store in the northern rural state of Chihuahua in Mexico. And as her parents aged, they said, please come back from Mexico City, where she had had a corporate career, to help them. And she did this. But one of the changes she made, her parents ran a fully cash business, and they're near a very big mine in the mountains of Chihuahua. And she switched a number of years ago to taking digital payments. And what was really interesting was most of the miners had a debit card, and that's in part due to the evolution in the market and the ease of know your customer and being able to get a debit card and a digital account, even at a convenience store in Mexico. And she became the only store locally that accepted digital payments, and the miners really liked that. So today, 70% of her sales are digital, and her sales have also tripled. But as importantly, she highlighted that it really helped her in her life because she doesn't have to be at the store all the time. She can spend more time with her wife and her children, and knowing that she can access all of her accounts. And that to us, when we think about what difference does this make for lives and livelihoods, I just want to underscore that the lives are as important in this equation. So the final thing I'd like to say, and I'll be very brief, is there were 6 actionable insights and recommendations that we have. The first is that the value, the small business value proposition, is much more than the single transaction and completing that sale. It is about the full picture of what this means for a business, of growing a business, managing the life, and being able to participate in all of the opportunities of a digital economy and world. The second is that PayFacs and intermediaries should be part of any strategy to digitally enable micro and small businesses. They are innovating and catering to these businesses in ways that others have not. And that's an important policy and investment consideration. Third, as we look at how to develop a market, it's really important to think about a balanced, in an economic term, we'll say two-sided market, where you have both the demand from people and customers, and also the possibility for business owners to have the digital payments. One without the other is lopsided, and you don't get the usage that really creates both opportunity, but also the scale and the viability of business models. Fourth, adopters as advocates. This goes back to the Net Promoter Score. One of the big questions is, well, gee, if we know this is really impactful, why are more people not doing it? Well, one of the things that Visa has seen from this research and also other work in other countries is that micro and small businesses trust each other. They trust their peers, they trust their friends, more than they're going to trust big advertisements. So how do we leverage that in communications to build those communities and build the trust and get scale? The fifth point is the importance of digital enablement for small businesses for COVID and recovery from the pandemic. And I think this is something we all agree on. So I'll pass over that quickly, but wanted to mention it. And the last point is about reliable and easy to use technology. There were some respondents, of course, came back and said, gee, there's some challenges here. And that was very small. Only 6% of all respondents were what would be termed detractors. But one of the issues they did highlight is that the technology, and often it could be the just reliability of the communications, is not there. So really important that we continue to make technology reliable and easy to use and simple. And my apologies, Ahmed, I'm going to go back to the recommendation number 3. One thing that I forgot to highlight is that we asked business owners, why did you start to accept digital payments? And this was really surprising to us. 63% of business owners said they started to accept digital payments because their customers were asking for it. 54% said it was to keep up with competition. And 14%, the number 3 reason, was safety and security, right? And so this goes back to that chicken and egg cycle, if you're going to put it in a negative way, or in a positive way, how do you build both sides of this market? So with that, I would like to conclude and look forward to a good discussion. Thank you.
Thank you so much, Amina. This is a very thoughtful presentation. For the audience, please, if you have any questions, please use the Q&A for your questions, and we will try to provide answers either by writing directly on the chat or by answering on the panel itself. Let me move maybe to Ashley. Ashley, the mobile money is providing huge opportunities when it comes to the acceptance. Possibly the initial use case for the mobile money was to the person-to-person transfer, but it looks like the whole world is moving right now and shifting to the use of mobile money to acceptance. And I think the statistics are coming something like 24% of electronic payment acceptance is done through mobile by a mean or another. So that's a huge percentage. Let me maybe move to Ashley and check with her what sort of opportunity that the mobile can provide to the acceptance business.
Yeah, thanks. You know, under our mobile money program at GSMA, we support our members and industry stakeholders to increase the utility and sustainability of mobile money services and increase financial inclusion. We're focusing our efforts to evolve the current mobile money business model into a payments as a platform model that creates value by connecting users to an array of digital services. So just like you said, moving beyond person-to-person transactions and providing a more full-bodied suite of financial services to customers.
Ashley, your voice is not very clear, or there is something like an echo.
Oh, sorry. Is that any better?
Not that much.
No. Taking these out. All right, is it better without that?
Yes, I think so. Yeah.
Okay. All right. So I was just saying that certainly we're focusing on supporting our members and industry stakeholders to actually move beyond person-to-person transactions and provide a more full-bodied suite of financial services to mobile money clients. There's definitely a growing shift towards digital payments, and the payment as a platform business model for mobile money providers has resulted in a new acceptance ecosystem in the mobile money space, relying on a range of intermediaries to ensure frictionless processing across multiple platforms. Do you want to move to the next slide? So I thought it was important for you to understand the size and the evolution of the mobile money industry in order to really grasp the growing importance of intermediaries in the sector, as well as the opportunity these intermediaries have with regards to mobile-centric payment acceptance. Our mobile money state of the sector industry report, published earlier this year, reported impressive growth in the mobile money industry in 2020, reaching 1.2 billion registered accounts. Active accounts increased 17% last year to 300 million, and the industry is now processing over $2 billion a day in transactions. Mobile money is available in nearly 100 countries, reaching the previously financially excluded and playing a critical role in driving financial inclusion. We can move to the next slide.
Ashley, I think there is a need. If you can speak a little bit slowly, maybe the voice is not very clear at some of the audience. No, but just slowly. It's
okay.
fine.
All right. So we can go to the next slide. Good. So digital transactions continue to dominate mobile money flows. And while P2P transactions are still a significant portion of the total transactions, mobile money services are becoming a more prominent payment acceptance method, displacing traditional POS solutions in some markets, and thus growing the variety of use cases from mobile money, such as bill payment and person-to-merchant payments. Mobile phones are increasingly becoming the preferred payment instrument and enabling low-cost payment acceptance, playing a critical role in the expansion of low-cost acceptance business models for previously untapped segments like micro and small merchants, many of whom are unbanked, as Amina had mentioned earlier. You can go to the next slide. So these growing use cases require and are really made possible through partnerships. Intermediaries are facilitating and strengthening these partnerships in many cases, offering the secure and fast cross-border, cross-currency, cross-network processing needed. These solutions are offering cheaper and more convenient electronic payment acceptance options with instant or nearly instant payment notifications and settlement times, which is critical for utility companies and small merchants with low liquidity levels. We can go to the next slide. Great. So narrowing in, Amina had touched on COVID-19, and we think that this is a huge reason that we've seen a critical increase in merchant payments in the last year. So they increased 43% in 2020 compared to 28% in 2019, with over $2.3 billion in merchant payments processed monthly. I think to add to this, it's an interesting note to say that QR codes have become the second most offered channel for merchant payments after USSD. But the rise of merchant payments, innovation in this space, and other use cases are critical to the sustainability of mobile money providers, shifting providers to payment as a platform business model. While the shift is introducing new players, new forms of electronic payments in the electronic payment acceptance industry, and there are important intermediaries like payment processors and payment aggregators in facilitating the seamless completion of mobile money transactions, reducing friction and ensuring payments efficiency and security when using mobile money services. While critical for financial inclusion, this has also introduced a host of new risks to the industry that the industry needs to be mindful of. When highlighting the risks of payments acceptance in the mobile money industry, I think it's important to acknowledge that electronic payment acceptance intermediaries are not themselves the holders of value. So the main risks they introduce tend to be operational risks. For instance, technology failure or delays, which may give rise to financial settlement risks, such as settlement delays and transaction backlogs, and fraud. I know we'll touch on these risks and mitigation options in a bit, so for now, I'll pass it back to you, Ahmed.
Thank you, Ashley. Thank you so much for your presentation. I think it's now we got a good understanding about the acceptance business in general, the role that intermediaries can play, whether we are talking about cards acceptance or mobile acceptance. I think the question would be to Sohail about how the regulators look at the risks of the intermediaries. What sort of risk that the intermediaries are bringing to the market that has never been there before, and how the regulators would think about this aspect. Thank you, Sohail, for addressing this.
Thank you, Ahmed. And after these two great presentations, it's very difficult to keep up with the momentum, but I'll try my best to do so. So to your question, I think regulators should not just be thinking about risks, they should also be thinking about how to enable the market and, while taking care of the risk. And what I'll try to do today is to go through the case of Pakistan and just share with the people here about the work that we have done over the past few years and what impact it has made and what we are thinking about the future. And of course, that would include a discussion on the risks also. So if you can move on to the next slide, what we can see there is that, next slide, please, Ahmed. So, yes. So historically, what the situation in Pakistan was the payment acceptance, digital payment acceptance or electronic payment acceptance was primarily dominated by banks and by card industry. So international schemes, Visa and Master, and they were playing a very important role. But there were two things that we need to understand. The digital acceptance, I think, started in around 1990s in Pakistan when banks started offering cards, and it was basically credit cards. So it was dominated by the card issuer industry was primarily dominated by credit cards. The second was, and after that, I think even after almost 20 years, I can remember, the electronic acceptance was a loss-making industry. So banks who were acquiring services, they were making losses basically because of high interchanges and low net margins for acquirers. And because of this, what was happening was that lower income groups remained excluded. Credit cards were only issued to high income groups, and banks, acquirers were only targeting high net worth merchants because they were not looking at the fee income, they were looking at the float income from the account balances. And there was, I think I can say that safely, there was a lack of presence of non-banks in the electronic acceptance space, primarily because of regulatory dysfunction. So the regulators were not thinking about, what to do to bring in more competition. And because of that, there was a lack of innovation and lack of adoption of new technologies in the space. Next slide, please. So what I'm about to tell you in some of the next slides can be summarized in the National Payment System Strategy that State Bank launched about, I think it was in November 2019. And the strategy identifies retail market as one of the prime use cases where we need to work. It also discusses about improving the payments infrastructure and working on the legal and regulatory oversight and the framework also, how we can improve it. So I can safely say that the strategy actually covers some of these steps that we were taking, and it also identifies some of the steps that we plan to take. So if you go to the next slide, you can see that in 2014, I think that's when things started changing. So in 2014, we started thinking about how we can enable new entities, how we can enable non-card-based acceptance. And that's where we issued the rules for payment systems operators and service providers. And the prime objective of issuance of rule was to give an indication to the industry that yes, the regulator is there and you can come and you can start offering your services, but also to give some guidance as to how we can manage certain risks relating to this business. And I'll talk about the risks in a later slide. In 2016, if you go back, yes, please. In 2016, so we started seeing the emergence of non-bank acquiring. We saw third-party payment providers coming into the market. We saw payment facilitators emerging and coming into the market. And we also identified the need for having regulations for electronic money institutions, which is the prepaid regulations. And we started working with the industry. And in 2019, in April, we issued the regulations for electronic money institutions. Because of these regulations, we now have about 8 to 9 EMIs who are in different stages of getting approvals from State Bank. Either they are in pilot or they are getting ready for commercial launch. And in 2019, also, we identified that we need to allow digital onboarding of merchants remotely. And that, I think, was a great piece of regulations when we allowed both the banks and the EMIs to onboard merchants remotely. And we told them how to perform the KYC and other due diligence. If you go to the next slide, yes. And then there were market-based interventions that we worked with the industry, and we identified that we need to take certain steps to improve the situation. So we started regulating interchange and market discount rate, merchant discount rate on debit cards. And I know Amina will not like, what we did, because schemes are not really happy with the way regulators regulate interchange. But the objective was that we wanted to make acquisition acceptance profitable in the country. And that's where I say that regulators need to think about profitability as well, new use cases as well, not just risks. And we also gave POS deployment targets to the acquiring institutions. So they need to, there are about 8 card acquiring institutions in Pakistan, 7 in fact, and they need to deploy a certain number of targets within the next POS machines within the next 4 or 5 years. We also issued a standard for QR code in Pakistan, and we said we'll go with a EMV QR code. And the idea was to make the acquiring less costly for the merchants. So we identified that it was costly for merchants to buy expensive POS machines and deploy them. So we thought that maybe giving a standard for QR, and we are continuing to work with the industry on having a single QR in the country going forward. We also facilitated the issuance of a domestic payment card in Pakistan, so domestic debit cards, PayPak, and the idea was to have a low-cost card that would support financial inclusion in the country. In parallel, we were working on improving the security on digital payments. We identified that improvement of security, including cyber security and other security measures, and preventing frauds is also very important if we want people to trust the system and adopt. So a number of measures were taken. So right now, the card industry in Pakistan is fully EMV compliant, and I think that has given a big boost to card acceptance in the country. Also, we asked schemes to apply, for example, 3D Secure on e-commerce as well, and we forced to acquirers and issuers to apply two-factor authentication and a number of other steps that we took. So security was important for us as well. So if you go to the next slide, please. Now, because of these steps, of course, these are just quarterly figures, and these figures are interesting because of the COVID situation. During COVID, we took a number of steps, and one of those steps was to reduce the fee on acceptance, and we have a real-time interbank fund transfer service in the country, and we removed the fee on that. That also had some impact, but because of the way we change interchange and we change the merchant discount rate sharing between acquirers and issuers, you can see that the POS deployment, which was flat for so many years in the past, is now starting to grow. And this is despite lockdowns and despite COVID-19. I find this to be a very important number. In fact, the latest publication of State Bank will show that we are at around 68,000 POS machines in the last quarter. Internet banking is on the rise. E-commerce is on the rise. So we are looking at some really good, encouraging results in acceptance. And we also started working on launching the Pakistan payment system, which is called RAST. It went live with bulk payments in January this year. We are working on rolling out the person-to-person transfers, but most important would be the person-to-merchant use case, which we will roll out early next year, in fact, mid of next year. And that would enable individuals to make payments electronically to merchants using the one QR code that we have. And we will have request to pay transactions that would enable new acceptors to come and offer payment initiation services as well, securely using our system. So we see the move from a card-based payment acceptance to an online fund transfer-based payment acceptance very much possible in Pakistan also. So if you move on to the next slide, please. So this is what we think the future of electronic acceptance would look like in Pakistan. So it's going to be, I think, a good market. We will have acquiring banks doing their usual acquiring, both using card-based acquiring and non-card-based as well. They would be using their apps, and so all of the major banks now have their own apps, and they are actively targeting merchants to bring them on their app-based acceptance, and card-based acceptance is also growing. We are also facilitating for example, contactless payments and other forms of payments. We have payment facilitators, bill aggregators also on the left, and they have two types of relationships. One is they can go and work under a direct outsourcing model with the banks, and they can also enter into contractual agreements with the electronic payment gateways. We call them PSOs, or payment system operators in Pakistan, and they can enter into direct agreement with them, and they can offer their services under the aggregator model and as well as under the payment facilitator model. And then we've got electronic money institutions who are going to be connected with the rest of the ecosystem using the RAS payment system, offering instant payment transfers to merchants and individuals. So if you go to the next slide, so how do we see risk in this whole ecosystem? Of course, the prime concern is the loss of customers or merchant funds. And if the funds in transits are there, and we need to find ways of making sure that the funds remain safeguarded. Consumer protection issues are very important, dispute and liability management. And we learn a lot of lessons from the way international payment schemes perform this function. But we also have to be cognizant of the fact that now is a fast time. Merchants want immediate access to their funds, and consumers want immediate refunds in case of disputes or other issues. Cybersecurity in recent years, you will agree that it has emerged as one of the major source of concerns for us, especially if it emerges or emanates from the merchant locations, POS systems and their servers, and then it risks entering into the payments and banking domain. And of course, most important, the AML and CFT risks. So we have to make sure that merchants and individuals who use the system, they are adequately, we do their due diligence. So how do we manage these risks? One way is to maybe do a direct regulation and oversight of all EPIs. And this we find highly taxing. We think it would be highly taxing in terms of HR resources and other resources on the regulators. The other model which we would prefer is to have our regulated entities like banks and PSOs and PSPs who are directly regulated by the central bank. They can be given the task of overseeing some of the specialized EPAIs. If you go to the next slide. How do we license? So there are three things I think a regulator needs to be concerned about with regards to the operations of APIs. One is, how do we license and register these APIs? So, and when do we do that, if we want to do that? So that's the timing is also very important. Do we start registering them or licensing them right at the initial stage? Or do we wait for a certain time and see, let their business, grow and reach a certain threshold, and then in terms of volume and value, and then we decide that they need to be regulated, and then at a certain time we can decide about designating these entities, designating as being systemically important, and applying principles like PFMIs to them at a later stage. Similarly, what are the oversight approaches? And I think if you ask me, safety of funds, consumer protection, there are two areas where we need to be vigilant in real time, and I think data provides a great opportunity for monitoring that. And then we can have regulations for dispute, liability management, and AML CFT. And of course, like I said, I think regulators need to work with the industry to make sure that EPIs remain profitable. Just relying on income, fee-based income would not be enough. So we need to think of identifying value-added services so that they can remain and profitable in the long run. So I think that's all from my side. Thank you so much for listening.
Thank you so much, Sohail. You said it all. I'm afraid I have nothing to add within my presentation, but it's really interesting, and I have to appreciate the experience of Pakistan in this field. I recall that while we were working on the innovations report, and we used the help of one of the World Bank consultants in AML CFT to address specifically the KYC, I mean reduced requirements or simplified requirements for merchants. And we actually worked with him for a couple of months in order to develop a chapter in our innovations report. And then we tried to find which countries have really developed something similar. And for my astonishment, I found that only Pakistan was having something specific for small merchants. I mean, some sort of KYC requirements that are simplified and specific for small merchants. That was really one of my, I have to say, the thing that I really was interesting of that the regulations of 2019 that you mentioned about the onboarding of small merchants. That's really, I have to say, a very strong step forward in the acceptance field. Let me have a question for all of you. Looking at the intermediaries in general, do you see that this business should be regulated or not regulated? Meaning that, do the central bank needs to intervene in such type of business, or it should be left to the market and to the other players to? By the way, both approaches are taken in many countries. Some countries, a lot of countries actually, just leave the intermediaries to the market and it has some sort of a self-discipline within the market. Others actually apply some sort of regulation. So let me maybe move to Amina first to get her thoughts about this question.
Thank you, and no pressure there on responding to that question. No, it's a tremendously important question, and I think we can see many different approaches. Where Visa comes out from our experience, right, in more than 200 territories and countries around the world, is that the key here is regulation and industry-led standards to work together so that they encourage innovation, they encourage investment, they encourage scale, and they do so in a responsible way. And it really, one without the other is challenging. So how do you get them to work well? So I think a couple of things that were already highlighted I'd like to underscore. First is the importance of the balance in the regulation. If there's maybe too much regulation, as Sahil pointed out, it could be very challenging for fintechs or other intermediaries to operate. It just might be too burdensome, for example, if some of the regulation is unnecessary. And principle-based approaches to regulation can be quite beneficial. The second thing, as Sahil also raised, is the importance of well-sequenced timing. And how do we do that? I don't know that there's a single formula for that, because every market and every country is different. And the intermediary space is evolving so rapidly, and it's incredibly complex with multiple parties involved and multiple groups wanting to reach different segments. And of course, technology changing really, really quickly. So I think we want to sequence it well. We want to have that balance. And maybe I'll just highlight two very practical examples. First, the emergence of the common QR code. Which came out of an industry-led group called EMVCO that developed these standards. Incredible, it's been adopted then in a number of countries with the collaboration of policy and regulatory authorities and spread. And what this does, as we know, is it makes acceptance almost immediately available and accessible at very, very low cost to small businesses. And as importantly, for the consumer or the business owner, it really simplifies things. You don't want to think about, do I need this or do I need that? You just go in and you pay for something. At the same time, because of the collaboration across the industry and with regulators, it's really secure. So for example, ISO compliant. And I can throw out the numbers, but I won't confuse everyone. So that's a great example. And the second example, which is essential to the success of all kinds of intermediaries, is the interoperability. Right? How does one party communicate with another? And again, we think about it from the lens of the user. I don't want to know about all the 6 or 8 or 20 steps involved. I just want to pay for something. And there, you have to have all of your back-end systems talking to each other in the right way but only with the necessary amount of information, safely, security, with consumer privacy involved. And sometimes if you're too uniform or rigid, you can stifle innovation. And you can also introduce risks. For example, if you put everything onto one rail, that might seem like a great way to get interoperability, but it can also introduce a single point of failure. And if something goes wrong, very often the consumer or the small business pays the consequences. So I think when we can get the balance and the dialogue, that's great. And it's going to depend in the different markets. Thank you.
Thank you, Amina. Can I check with Sohail on your input here as well, please?
Well, thank you, Ahmed. So you are asking a regulator about whether EPI should be regulated or no. So the answer is by default, it's yes, they should be regulated. But again, like I mentioned in my presentation, there are two factors to that. One is decision as to when do we start regulating them. Should we do it right in the beginning or somewhere in the middle or at the end? And the other question, which is also very important, is the level of more than regulation, it's about oversight. What level of oversight do you need to have on these EPAIs? And this oversight function can mostly be outsourced to other regulated entities like banks but I think it needs to be done. It needs to be done because of the issues that I mentioned in my presentation, like dispute.
Thanks, Sohail. Maybe Ashley, I'm referring to you for the same question.
Yeah, thanks, Ahmed. I mean, several comments from my fellow panelists resonate, I think, on our side. Market-based engagement with industry, industry-led standards, oversight. I think in the mobile money ecosystem specifically, mobile money providers are regulated. And while the intermediaries sit outside of this regulation, we see an opportunity to, lean on, and perhaps this is what Sohail was getting at, is outsourcing oversight, kind of lean on the mobile money providers to provide that oversight to the intermediaries. They have a real incentive not to allow risks into their business, into their payment systems. And I think there are some good examples of this, where we could see industry-led standards, or we could see certifications that can support this without going to the extent of regulation, which could provide more complexities. As Amina mentioned, this cost then when you enter in these regulatory complexities will ultimately, go on to the consumers, which actually could, in effect, revert our financial inclusion strides that we've made and the progress we've made if the transaction fees become too high. So, for instance, there's the PCI DSS standards for the payments card industry, for their payment processors. And GSMA also has a mobile money certification, which we use. And it's, mobile money providers are independently assessed against the certification parameters and indicators. So these are options in lieu of regulation to provide oversight, to provide some sort of high performance standards without going to the extent of over-regulating, if you will.
Thank you, Ashley, for your input. Maybe I'll start my presentation, but before starting the presentation, I need to give a background about the overall work stream that we worked through. We were having this electronic payment acceptance intermediaries work stream. That's part of the EPA work group that that's the work under FIGI. And this work stream, actually, for we were lucky to have a number of regulators, a number of market experts within the work stream who actually contributed to the work that we are presented right now here. So the first thing maybe is to talk about the different maybe risks or the reasons of why we regulate intermediaries, and we have a list of maybe 6 different issues that we need to address. Things like the access to customers' financial information, access to merchants' funds, the consumer and merchant protection, management of financial and operational risks, compliance with especially with the KYC, AML, CFT requirements and other requirements actually. And finally, the management of outsourcing risk. So in general, those are the reasons why some regulators actually issue some sort of regulations to manage or to regulate the business of the intermediaries. We have three different approaches that we have noticed worldwide about how to regulate the intermediaries, and we will touch base on each of them in a very rapid way right now. So the first approach is the direct regulation. Direct regulations meaning that the regulator will issue regulations directly to each type of intermediary or to some of them. For example, for the facilitators, those are the requirements that you need to satisfy. For the payment gateways, those are the list of requirements that you need to satisfy. Typically, the types of areas of regulations here would include the access to merchants fund, because facilitators receive the fund on behalf of the merchants and then distribute it to the merchants. The time where the facilitator is having the merchants fund is a risk on the business, because maybe the facilitator will take the money and escape maybe to a different country and take the money with them. Maybe they could, for example, the company itself could fail, and then the money of the merchants could be, I mean, part of the insolvency proceedings or something like this. So those are the types of risks, and based on this, the regulators could put some measures. You shouldn't have the funds in your own books. You should put it on to have a segregated account. Things in that way. Other issues like access to customers' financial information, which is addressed typically by data protection, access to consumer and merchant protection. Management of financial and operational risks, compliance issues, and finally, aspects related to outsourcing. So in general, those are the areas where the regulators could need to intervene. Typically, the intervention would happen in a specific way, which is asking the intermediaries to be licensed or registered by the authorities, by the regulator themselves. So if I'm opening a new payment merchant facilitator company, I will go to the central bank, ask them for a license. And in this case, the central bank will do a complete due diligence on me before giving me the license. Typically, in this case, the requirements would include minimum capital, maybe assets, maybe fit and proper requirements, and a sort of generally management, sort of how to manage the different types of risks. The countries that took this approach are India, Indonesia, Mexico, and we have a list, by the way, of a larger list, I think, including Thailand and including others. So within our report, you will find those examples, and you will find more details about the regulatory aspects of those, of direct regulations approach. The second approach actually is interesting one. Let's have a look on some payment schemes. For example, Visa or MasterCard. Visa and MasterCard and other payment schemes, by the way, they apply sort of requirements on the intermediaries. So if you want to act as a facilitator or aggregator or maybe gateway under Visa or MasterCard or other payment schemes, in this case, you need to satisfy certain requirements, and you need to have a sort of license directly from them in order to participate within this scheme. So some regulators took a sort of an indirect approach. So if the payment scheme or the payment system, it depends on how it is called in different countries. So if the payment system or the payment scheme is already having detailed rules on how to accept a sort of the intermediaries. In this case, the regulator may do something, may first ensure that the requirements are adequate. And by the way, they may ask the payment scheme or the payment system to add some extra requirements or something like this, but keeping the whole process, including the licensing, the certification, everything within the rules of the payment scheme or the payment system. At the end, a lot of regulators actually audit the payment schemes, oversee the payment scheme, the payment systems, and ensure that the rules are applicable or the rules are compliant with the local regulations. So this is, in general, the approach that many regulators are taking. And within this way, it's a sort of an indirect approach. Typically, it will cover aspects like the scheme governance, the representation, scheme rules, liabilities of different parties, the competition and market structure, sometimes the pricing, sometimes things like interchange fees, operational IT and security risks. So those are in general the regulation that are applied on the scheme itself or the payment system by the regulator. And under such rules, the responsibility of the scheme or the payment system is to ensure to mitigate the risks applicable or applied by the intermediaries. So this is a second approach, where the licensing in this case would be given to the payment scheme or the payment system itself, while the intermediary is licensed by the scheme or the payment system. There would be typically some sort of governance arrangement regarding the scheme governance and or the payment system governance. There would be some sort of controls over the rules and the contracts, and some sort of, it could be some sort of amendments to the rules. Again, our report is very detailed about those aspects. I think it's a very valuable report, especially that this area we didn't see a lot of research on this specific area, and it's an evolving area everywhere in the world. And I think that's why I think the report is very timely here in addressing those aspects. Examples of those, I mean, this sort of approach is in the EU, in Hong Kong, in other countries where they, for example, define a specific payment system as a systemically or prominently important, and based on this, they have some sort of requirements, oversight requirements on this payment system. And at the same time, some countries regulate specific aspects like fees, like interchange fees, merchant discount rates, or others. The third approach is actually very interesting as well. The third approach is where the regulator focuses on mostly on the acquirer, on the whether we are having, by the way, a direct acquirer, I mean, a financial provider acquirer like a bank, or maybe a non-bank acquirer. So the regulator starts to apply regulations on the acquirer, and then deals with the intermediaries as an outsourced service for the acquirer. So in this case, the intermediaries are regulated through the acquirer, but we have, even within these two different approaches, either to have specific outsourcing requirements for the intermediary, or deal with the intermediary business like any other outsourcing business. So they put it under the general banking general outsourcing regulations for commercial banks or for financial service providers. So here, the scope of the regulations for the acquirers could include, for example, the settlement on merchants' accounts, the merchants' due diligence, the protection of customers' data, the service level provided within the market, aspects related to dispute resolution, aspects related to chargebacks and refunds. So the regulations of the central bank could tackle those issues when it comes to the acquirer bank or even non-banked. Then by dealing with the intermediary as an outsourced service, then the regulator could have still control on the intermediary, but it's an indirect control through the acquirer. And you know that when it comes to outsourcing in general, the outsourcing institution, which is the bank here, is fully liable on the deeds of the outsourced service. So in this case, for example, if the intermediary did something wrong, then the acquirer bank is but typically will be maybe penalized or will be warned for the bad deeds of the intermediary. This, by the way, would require the acquirer bank to have strong sort of due diligence on the intermediary. It would require them to have a sort of strong oversight over the intermediary. This is the typical aspects that I mean should be addressed within the outsourcing: the contracting, the merchants due diligence, operating merchants accounts, and so on. The regulating the outsourced activities would include things like the outsourcing policy of the bank, the outsourcing risk management framework, the due diligence requirements, the outsourcing contracts, and the data protection and the concentration and cross-border risks. Concentration here that, for example, you wouldn't like that all the acquirers in a specific country are outsourcing the same facilitation business to the same merchant facilitator. That wouldn't be a healthy market at all, because at the end these merchant facilitator would control the whole market. So you wouldn't like, for example, some sort of a concentration risk. Finally, the approach would be to issue some regulations for the acquirers themselves, and then some requirements, whether they are indirect, to license or authorize the intermediary through the acquirer. The approach here is either to apply for an approval for the regulated or outsourced service, to just inform the regulator, or to just record the registered or the outsourced service in a registrar. Regulating acquirers' activities, actually, this would include direct regulations to acquirers. This is similar to what Nigeria did, Ghana, Malaysia, Indonesia, Thailand, US, India, and Singapore. So we have actually a lot of countries that issued regulations directly to the acquirers. Regulating the acquirers' outsourced activities, this is actually, we have very few countries, including Egypt, Malaysia, and the United States. The United States, by the way, they have detailed, I have to say, oversight requirements or supervision requirements when it comes to the outsourced services of the acquirers. Finally, the outsourcing standard that typically the regulators refer to are the BIS on the outsourcing guidelines for financial services firms, and the Financial Stability Board on regulatory and supervisory landscape with respect to outsourcing and third-party risk management. So those are typically the three approaches that regulators take, and this is I have to say, a very vast scheme to all the markets. Maybe we missed one or two, but the research here was very heavy in order to try to understand how different regulators look at this specific aspect. By the way, when looking or when applying one approach in a specific country, this doesn't mean the other approaches are not, applicable. In a single country, you may apply 2 or 3 of the approaches, meaning that you may issue direct regulations to the intermediaries, and at the same time, you may do a sort of payment system oversight and apply requirements on the payment system or the payment scheme. In other countries, they may regulate the outsourced service of the acquirer bank, and at the same time, they could apply some sort of direct regulations on the intermediaries. So it doesn't mean that they are, either or. They could be linked together. But it would be much better if the regulator is having, I have to say, a homogeneous approach to the market, homogeneous approach to how they regulate the non-bank services in general. So I'm sorry. So let me maybe back to you. I hope it's not the different approaches were not confusing. But let me be back to the panelists, and let's maybe open those models for discussion. How you see them? How you what are the maybe the drawbacks and maybe options for applying each of them. Let me refer to Sohail first on this part. Thank you.
Thank you, Ahmed. No, I agree with you. I think all the 3 models are applicable, but I was thinking while you were presenting the 3 models that maybe in many instances, we need to think about having a hybrid approach. So maybe not a single model may not be applicable to the entire ecosystem. And it depends on the type of intermediary, on the type of business, and on the aspect that you want to regulate. That's very important. So I think all 3 are very valid, but we need to think in terms of maybe having a hybrid approach. From a Pakistan's perspective, I was thinking of, that let me take this component from model 1 and this one from model 3 and do a hybrid one. So I would go with hybrid.
Okay, that's interesting, Sohail. Maina, would you like to add something here?
I think that's a really interesting and excellent recommendation. And as we know, we always want to be responsive to the local context, be it in the product design or in the regulation. So it's very hard to have a single approach or a single silver bullet. One of the things I find really interesting about both the different models and also the potential for hybrid is that it speaks very well to something that Visa supports, which is a principles-led approach to regulation and standards, right? So to give one very, very simple explanation of what I mean by principles-led. We very often talk about regulating and setting standards by the kind of service, not by the type of provider. So for example, you want to have a single shared regulation around savings and protecting savings accounts, not is it provided by a microfinance institution or a bank or other. And so I think those work very well together and give the necessary flexibility and responsiveness for each national priority and also evolution over time. Because the only thing we can say about many things in the digital realm and in this fast changing space is that what exists today will surely be different in 5 years.
Right, I fully agree. Ashley, I will move to a different question for you. Is possibly how to encourage the intermediaries, knowing that they have a huge impact on the market. How you can encourage them from business perspective and from regulatory perspectives. Thank you.
Yeah, sure. So encouraging intermediaries. Many mobile money markets are still P2P. So these new use cases that are emerging, and as these markets mature, there's going to be increased demand and need for intermediaries. So on one hand, it's kind of build it and they'll come. There's a demand for them. I think on the regulation side, it's encouraging innovation, it's encouraging market-driven pricing and transaction fees. And I think it's important to note that, as Amina said, the technology is fast changing. So things are evolving. I do think intermediaries needed to be able to adapt and adjust. I think Sohail mentioned it earlier about, as regulators, being concerned about the profitability of these companies, but also I think in addition to that is the relevance. So as the technology is changing, the intermediaries have a responsibility to also adapt and make sure that they continue to be relevant. For instance, as we see, harmonized APIs, it's addressing multiple needs that are actually making some intermediaries quite irrelevant. So I think that there's a real market-driven need here where all the players need to, see the demand, see the use cases, and figure out how to provide value and bring it to the industry in a unique way.
Thank you, Ashley. Would we move to Amina as well on how to encourage this, intermediaries business, especially in some regulators, by the way, facilitate to the market, but there is no initiatives in the market. The market itself don't make the initiatives to start a company, a large company, for acting as an intermediary or something like this. How we can react? How the regulator could react in such a case?
It's an excellent question, right? It's the question we're all concerned with. And drawing on the lessons and insights from this experience in the study in Mexico and also other countries around the world where we've been operating, I'll highlight maybe three things to keep it simple. First is the importance of the business case or the economics for all parties involved. This has been talked about a lot throughout the cycle, but we know that you have to have a sustainable business model that encourages the investment and the reinvestment and the reinvestment and the redesign over time so that you're continually evolving your market, first to include small businesses and then to continue to meet their needs and their customer needs. And this is incredibly important. And of course, if you get really deep into the economics, there are all these questions of like, what's the startup cost and how do you overcome that first hurdle? But keeping an eye on this larger question is really important, especially because there's so many parties involved. And I also want to underscore that this business model question is equally important for the small business owner, right? One of our big insights from Mexico is that the value of digital payments extends far beyond that single transaction. And so if you look on the return on investment and say, oh, I have to invest a certain amount to start to accept digital payments, and that amount in real cost, it might be their time more than anything else. But then if you get a 22% return on increased revenue per month, wow, that's a really big boost. I'm not sure how many other interventions get that. So that's what we want to consider. The second thing, and I want to highlight something that came from the Better Than Cash Alliance, one of their insights from, I think, a report, it was back in 2018, if I'm remembering correctly, is that when the digital payments infrastructure is both open and inclusive, it then drives the volume, that drives the reduction in unit costs and any fees involved. It encourages robust competition, which then drives innovation and further investment. And I think this, the question for us is, how do you start that virtuous upward and expansive cycle? And to there, then the question and the recommendation for policymakers, and I want to stress policymakers in addition to regulators, because it's not only about financial regulation, is what they can do is foster the ecosystem that encourages the intermediaries to come in, to invest and to innovate. And that's one of our really big, I think, lessons that we've seen in Mexico, how that some of it was legal reform, some of it was policy reform in telecommunications, other was in financial sector, including on KYC, including agent banking, but that's really lowered the cost for all parties involved. So you can go out and a small business owner in Mexico can go to a convenience store, 19,000 OXXO stores around the country, anytime, day or night, buy a little dongle for less than $20 and enroll with one of these aggregators, payment facilitators, and be active in just a few minutes, right? And that's incredibly transformational for the opportunity. And many, many things came together. And I think that's where central banks can collaborate with policymakers and other sectors of government to foster that and work with the private sector. So thank you.
Thank you, Amina. Finally, the same question to Suhail. As a regulator, you issue regulations to facilitate the emergence of new types of business in the market, but how you expect the market to react? I mean, Pakistan is a special case as well, because you have a large population and you have a large market, and the opportunities in the market, the potential of the market is high all the time. So how you expect the market to react to the initiatives coming from the central bank?
Thank you, Ahmad. And I think that's a billion-dollar question, because if we could, capture the essence of the whole thing, we would be doing it right all the time. I think the first thing is to ability to work with the industry and, listen to what the industry is saying, what the supply side is saying. But more importantly, it's very important to look at the demand also. Now, in case of Pakistan, we expect the number of merchants to be around 4 to 5 million. It's a huge country, and we are just thinking of formal businesses, not the informal ones. And then in a country like Pakistan, cash is not the king, it's the emperor, I must say. So everybody wants to deal with cash, and rightly so. It's free for them, it's ubiquitous. You don't need an acceptance infrastructure, you don't have to depend on technology and all that. So how do we convince the merchants to accept digital, and and even more important, how do we convince the consumers to pay digitally? And I think that's where we need to listen to customer. One thing that I found very interesting and important is the customer experience themselves, without thinking about which income strata they belong to. You need to think in terms of how I can improve the customer experience, starting from a checkout at a large store. So you are a regulator and you are thinking, how can I reduce the size of the queue there on the checkout counters? And moving on to very low-level customer merchants and customers who have low level of education, who have low level of understanding of financial systems. So you have to think in terms of what they need. The second, and I think the elephant in the room, is the pricing. And I wanted to ask this question, whether you should be ready to regulate pricing or not, and to what extent. And I have seen that during COVID in Pakistan, when we imposed an embargo on charging on interbank fund transfers, and I myself saw that merchants, they put aside their POS machines, and they started displaying their account number, and they were just asking customers, if you can just transfer money to my account directly, and I'll be willing to accept payments digitally. And that was because it didn't cost anyone except the supply side to process those transactions. So and that is a very, very important question for me as a regulator. So how do you regulate or not, and what type of incentives you build into the system to discourage cash and accept payments digital?
Thank you so much. I think we have only 3 minutes or less. So if I give you 30 seconds for each of you, just for closing notes, how we see the market going in this direction, the use of intermediaries, how can we see that the over market, the future of this market in acceptance? Amina, you can start.
Oh, thank you. The future is digital. What we at Visa want to do is enable everyone everywhere to have the opportunity that comes from meaningful participation in digital commerce, digital income, digital trade, digital welfare. So we believe that intermediaries are important. We believe open, interoperable. And we also know from years of experience that you have to have a sustainable business model, and that when the product and the service is right, and people happily pay for it because they get so much more back, So it's that balance, right? How do you get started? Because the potential returns are huge, and we want to encourage that everywhere. Thank you.
I'm sorry. You have a question on the chat. If you can answer directly, it would be great. Thank you. Ashley, in 30 seconds, how can you see the future of this business?
Yeah, I would echo a lot of what Amina said. It's digital. We've seen how the mobile money industry has played a critical and impactful role in bringing electronic payments to people in emerging markets over the last decade. We don't see that changing. We see it expanding and growing and continuing to be a huge lever in financial inclusion. I think, this idea of a business model for mobile money providers moving to payments as a platform is really pushing them to innovate and other players to integrate with them to be more relevant and to provide multiple use cases besides just P2P transactions. Technology is rapidly changing. So, we don't know what the space will look like in 5 years, 10 years. We know that it's going to expand. We know that it's going to grow, and we know that it's going to become incredibly more, have incredibly more touch points to all folks.
Thank you, Ashley. Suhail?
Yeah, Ahmed, the future is, I think, convenience for everyone. And that means low cost, no settlement delays, good dispute procedures. And I think a lot of that you covered in your presentation also. But the bottom line is how convenient it would be for a user, for a customer to make payments, and how convenient would it be for merchants to accept payments conveniently. And I think with technology, like Amina and Ashley said, I think it's very easy for us to make it happen. But I think we need to listen to customers and make sure that the headline remains convenience for everyone.
Yeah. I fully agree with the three of you, and I think I add as well the add value. If the solution is adding value to everyone, it will succeed. Thank you so much for this fantastic panel. I was really enjoying listening to all of you. And please, the participants you can put your feedback on the panel. Right now, there will be a sort of a survey that would appear. The next session today is Tuesday, June 8th on 11 a.m. EST. It will be the guidance for regulating eKYC. The session is on the lack of identification or reliable and independent proof of identity of individuals makes it difficult for FSPs to open accounts. This session will present different approaches to eKYC regulation, including the FATF guidance on digital ID published in 2020 and temporary measures adapted to address COVID-19 related needs. Thank you so much. I really enjoyed this panel, and I hope you can join us in the future. Thank you.
Thank you. Bye-bye.
Thank you.
Thanks. Bye.